Anthony Noto's not out to get you. There's no reason that he would be out to get you. And if there was a reason, he couldn't do it without hurting himself. So no, the answer is not that he's trying to screw us. All they're trying to do is protect the shares, protect the company from being delisted or being shunned by institutional investors. Vote yes. I guess that's the call to action. Vote yes. That's it. Just vote yes. Let the smart people who run the company do their job. Don't get in their way. Warren Buffett says, I invest in great management and I get the heck out of their way. Hey there, Lincoln here from bullacademy.org. Today, let's talk about what you all apparently want to hear, which is SoFi's news of a reverse stock split, or at least a vote on giving the board of directors the power to conduct a reverse stock split in the next year. And what that means for shareholders, investors in SoFi stock, which is currently around $5 per share or $6 per share, depending on when you look at the market. And address any of the myths and beliefs out there around stock splits and why SoFi and Anthony Noto might want to do a stock split, a reverse stock split in the future. Because we all know everyone loves stock splits if it's a actual stock split where the stock splits in multiple pieces and there's more to go around for more investors out there. And for some reason, investors love that, even though it has absolutely no fundamental impact or intrinsic impact on the value of the underlying company, the business, nor the stock. Because it's literally a split of a pie. You split a pie in 8. You still have the same pie, just now there's 8 pieces instead of 1. That's literally that's all it is. Still, investors, for some reason, run up the stock whenever it's announced. But when a reverse stock split is announced or suggested, investors get scared because they think, oh, the company is struggling and they want to artificially increase their stock price. Sure, when you reverse a stock and turn 10 into 1, you artificially increase the stock price by 10-fold because of multiplication. 10 times 1 is 10, right? So yes, when you do a reverse stock split, the stock price just goes up by whatever the factor of the split is. So a 1 for 5 multiplies the price by 5. A 1 for 10 multiplies it by 10, right? So that's true. Yes, the stock price would go up if SoFi did a reverse stock split. So yes, we can all agree on that the stock price would go up in that case. But now the question is, why would SoFi want to do a reverse stock split? Is SoFi struggling? Is SoFi going to go bankrupt? Are they doing unquestionable things? Do they have numbers that we don't have? No, they don't have any numbers that we don't have. At least they don't have material numbers that we don't have because they just did a report, their earnings report this week. The day before the announcement or the invitation for shareholders to vote on whether to give the board of directors the right and the power to conduct a reverse stock split. So we saw the earnings report. The earnings were great. They had record earnings. The business units are still growing. Lending is making lots of money across the board, including student loans, which is holding steady despite the moratorium by the federal government on student loans. The business is doing well. It continues to grow. They have more members. They have nearly 4 million members now. And those members are using more of their products across the board. That's Invest, that's Money, that's Robos and credit card and all the other things, mortgages, right? Loans. The business is doing exactly what we wanted to do, continuing to grow their revenues and then continue to cut their cost. Right, continue to make their revenues increasingly cheaper, which means that they are approaching profitability. That's why they're able to beat estimates. That's why they have adjusted EBITDA profitability now, and hopefully we'll soon have GAAP profitability, actual free cash flows. We're at negative 14 cents per share. I believe that's what the number is. The business is working. It's doing what we want, despite what used to be a big part of our business, student loans, being on hold. Which means that once the moratorium is ended on student loans, we will get more money from student loans. The business will continue to grow in that unit, student loans, and also personal loans, which are doing amazing, and home mortgages, which is a small part of their lending department and continues to grow by triple digits, I don't see any reason why anyone would believe that SoFi is struggling and needs to do a reverse stock split in order to artificially increase their stock price just to make it seem like they're doing well on the business side. They don't need any artificial maneuvers to make it seem like the business is doing well. The business is doing well, right? Of course, we're not profitable yet, but we're going to get there, and we're making steps towards that. Still, the business is doing well. It's making progress. That's all we need. We're a growth company. We're not a blue chip. We don't need to be profitable yet. We're making strides towards that. The company is delivering above expectations every quarter. They're beating analyst estimates over and over. They're increasing guidance. We're now back to even, or maybe above what we were before guidance was decreased after the student loan moratorium was extended by Biden a month ago or 2 months ago. Anthony Noto is doing well. So I'm not just here to praise SoFi. There's many places where they could do better, right? I did a poll a few weeks ago on whether or not SoFi should overhaul their investment app, the UI, to make it cleaner, to make it more like Robinhood's design, which is clean, right? Of course, not the same features, but just the way it looks, the experience of it, to make it better. SoFi struggles on that part of the business. And there's many more we could point to, but that's not the point of this video. The point of this video is that SoFi's numbers, their businesses are doing well. So let's take that off the table. We just saw the numbers. The business is not struggling as far as we can see. So unless they're committing fraud and the board is not upholding the fiduciary duties, which are real crimes, then we have nothing to worry about because we just saw the numbers. So if you have any concerns around a business, you should go look at the earnings and point them out. And if you don't like something and you think that it's going to cause the company to completely fail in those numbers, then maybe consider selling the stock. Maybe it's not right for you. But if you don't see anything that's alarming in there that you think is going to be a fundamental flaw of the company, then we can take that off the table. So now that we're past that, let's talk about why SoFi actually might be doing this and what I believe it is. People who understand the workings of the market, this is what they believe. Institutional investors account for about 40% of our outstanding shares. 40%. Yet our shares are down to $5 per share, above $5, $6, around there. Institutional investors need to see the stock price at or above $5 per share. They have to. That's just their mandate. If it goes below that, they cannot invest in it by their own policies because it just doesn't look good. It's considered a penny stock at that point. So, with our stock price at $5 per share and it's being shorted at 21% of the float being shorted by short sellers, if this stock price goes down below $5, the selling pressure on institutional investors will be increased. And once that is increased, they will have to sell their shares because they do not like to invest in penny stocks, which is what will be considered under $5 per share. And when those institutional investors start to sell, the stock price will fall even further. It will go to $4 per share. And then all of you out there who are freaking out about this right now, about just a vote on giving the board of directors the power to maybe do a reverse stock split in the future. Those of you who are freaking out about just that possibility are going to freak out about the share price being at $4 per share. And then what you're going to do is you're going to start selling. And then we're going to go to $3.90. And then the rest of you are going to start selling. We're going to go to $3.50. And then there's going to be panic among retail investors. We're going to go to $3.20 and continue to fall as retail investors start to sell and institutional investors continue to sell because it's a self-fulfilling prophecy. Once it goes below $5, institutional investors start to get out because they can't be seen holding a penny stock. So they started to sell. And eventually we're down to 20% institutional investors, or down to 10% institutional investors. And they hold a lot of the shares. So we don't want to see that happen. So SoFi is saying, hey, since there are all these short sellers out there shorting our shares, there's a chance that even though we're doing great, and we've been doing great, we've been beating our expectations, our stock price continues to fall, especially given the macro environment with the war in Ukraine and inflation and interest rates rising and all the panic in the market overall. Our stock price continues to fall, especially due to short sellers continuing to increase their bets against us, even as we have record on record on record earnings reports. 7 straight quarters of adjusted EBITDA profitability. Our numbers continue to grow, and we continue to get more and more closer to profitability, and short sellers continue to bet against us. But before we get to that, if you enjoyed this video, do me a big favor and like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts. It's important that you engage, because if you don't, YouTube won't recommend my videos, and I can't continue to make these videos for all of us to learn and build wealth together. So all you have to do is just engage below, like, subscribe, and comment. Thank you in advance, and now let's get back to the video. They see how, frankly, weak retail investors are, and they've always been weak. And so we get to the other potential function of a reverse stock split, which might be a way to remove more retail investors from the holding of this stock, to increase the institutional ownership of SoFi stock, because institutional investors are not as weak as retail investors. They don't get scared by simple possibilities, more tools in the toolkit, because SoFi suggests, hey, there is a lot of uncertainty in the market right now. And people are forecasting a recession in the next year. So we're asking you shareholders, hey, can we please have a few more tools just to make sure that we don't get delisted when we go below $1 per share, as the market continues to panic and short sellers continue to short us? Because that could happen. If the stock falls below $1 per share for 30 days or more, we could get delisted from the exchange and then become a over-the-counter stock, which is untouchable by anyone, right? You can go buy, but it's highly unlikely that you will, because you don't even see it. You don't even know about it. So we don't want that. And SoFi sees that as a possibility if the uncertainty continues and we have no control. And so SoFi is saying, hey, we know a way to control the situation in case it gets out of hand. In case people continue to short us, the market continues to go down, we might go into a recession, inflation might continue to rise or stay high, interest rates might go high, much higher, which would be good for SoFi, but the market doesn't seem to understand that. And so the stock can continue to plummet. And if it plummets far enough to below $5 per share, institutional investors are going to leave. And if it goes below $1, you're going to get delisted. And so all we're asking you shareholders is, hey, we have the right tools. We're very smart people on the board of directors and the CEO and the C-suite. We know what we're doing. We've been in this business. We've seen a thing or two, right? We know a thing or two because we've seen a thing or two. And so we've seen what can happen, and we know how to offset that should those worst case scenarios play out. And the answer is a reverse stock split. It doesn't have to mean that the business is not working. All it could mean is we can't control the stock price. And so the only way that we can offset the continual fall of it below what it should be, below what institutional investors would touch, below what the analysts on TV will talk about, because they won't be talking about any penny stocks. You've never seen them talking about a penny stock unless it's a GameStop or AMC that's running up for whatever reason. They don't talk about penny stocks. And so that our name's not in the conversation. And SoFi knows that we need to be in that conversation, especially as a bank. And so if we go too far below, they will never even talk about us. We'll never be seen. We'll be in the dark. We'll be shadow banned, right? Anthony Noto, the board of directors, they're very smart people. I was reading through the board of directors last night, all of the members of it. And each of them are incredibly impressive. Some of them are on the board of directors of MasterCard, which we just partnered with on Galileo. Some have been at all of the banks and led recoveries from crashes. These people are not dumb. They're not trying to screw you. For some reason, whenever something starts to go a little wrong or there's some bit of uncertainty, retail investors think that they're being screwed. Why do you think that you're so special? We're not special. We're just investors. Just like Anthony Noto and the board of directors who hold shares of the company, who have a vested interest in the company. Why would they try to screw the shareholders of which they are a part of? You're not a special class. They're not trying to screw you. People need to stop saying that. Anthony Noto's not out to get you. There's no reason that he would be out to get you. And if there was a reason, he couldn't do it without hurting himself. Because he too is a shareholder of SoFi stock. Believe it or not. And he actually just bought more SoFi this week. Thousands of more of SoFi stock. So no, the answer is not that he's trying to screw us or the board of directors trying to screw us. All they're trying to do is protect the shares, protect the company from being delisted or being shunned by institutional investors. And so people say, reverse stock splits, no one legitimate does it. Well, Citigroup, you know Citigroup. They seem to be a legitimate bank that people care about. They did a reverse stock split in 2011 after having crashed from the 2008 recession and that whole debacle. It doesn't have to mean that the company is doing poorly. And you've seen the numbers yourself. I just did a skit this week or maybe a day or two ago about selling SoFi and how retail investors look at the stock price and that's all they care about without even looking at the actual numbers that are reported by the company and seeing that the company is doing very well, making strides towards their goals, beating expectations over and over. They don't see that because they're not looking at it. All they see is the stock price and they say, oh, the stock is up. So happy. Everything's good. To the moon. Oh, the stock price is going down. Awful company. Bad company. Anthony Noto sucks. He's trying to screw us. Why would the board of directors want more tools in their toolkit? And they sell. So I don't even know where I'm at anymore because I'm just ranting. But I've answered the question. That's what I believe it is, and just by reasoning, right? I think it's pretty simple at this point what the reason is. And if you don't see it, you don't want to see it. You don't want to believe it. You want to believe that someone's out to get you, but no one's out to get you. Besides your own psychology, which is making you fearful. And I get it. Uncertainty is scary. It's awful to feel like you're not in control. It's awful to think that your stock price can be just manipulated into lower prices. And you have no control over getting that back up. And you could lose some of your wealth. But guess who else feels that way? Anthony Noto, a very smart guy, and the board of directors, a bunch of very smart people who have seen this before and know what to do to avoid catastrophe should it occur. And they say, hey, we don't believe we'll need this. We don't want to use it. We shouldn't have to use it because we're doing so well. But we can't control the stock price. We can't control what the short sellers do. All we can control is how the business operates. And we're doing that very well. And we can ask you for one more tool, which is a reverse stock split. Just give us the power to do that at any moment's notice, just in case we need it. Because if the time comes that we're trading below $1 per share and it's day 28 that is happening, and we only have 2 days left to get above $1, and we have to hold a shareholder vote to get that right to do a reverse stock split to save us from being delisted, it won't happen. And we'll be delisted. We'll become a over-the-counter stock, and you all will lose a lot of money because the stock price will plummet even further. So all we want is the power to do a reverse stock split at any time in the next year should the worst case scenarios of this market play out. And maybe to wipe out some of you retail investors who are just way too weak to hold on to a company that is doing very well because the stock price is going down and you can't handle a short-term correction, which is part of the market. So we will rather you all leave. You can leave if you can't handle it, and we'll have a bigger proportion of our outstanding shares be held by institutional investors who can hang on, who see the actual business, who see the actual numbers of what we're doing and see the potential, see the vision, the long-term potential of this company. Those investors are the ones that we want. And so if you can't handle it, we will have less shares outstanding. And if you sell, you all sell, institutional investors will pick that up because it'll be cheaper, as they've been doing. They've been acquiring more shares as retail have been dumping them. So as you sell, the people you don't like, the institutions, the suits, they are buying up your shares because they can see beyond the next week, beyond the next month, beyond the next 5 years. They can see the past because they've been there. They've been through a bunch of ups and downs. They know how this cycle goes. They know there's going to be bumps in the road, and they know there's going to be short sellers, and they know there's going to be recessions and interest rates and inflation and wars and all the things. They know about all of it. And so they say, hey, retail investors, dumb money is what they call us. Go ahead and sell SoFi. We'll keep buying it up. And so they've been increasing their ownership. And so SoFi might, as a result of a reverse stock split, get what they want, which is more institutional investors holding their stock over retail investors, because retail investors are too volatile. They're too emotional. And that causes fluctuations in the stock, which is not good for management, because the point of the stock market is to be able to raise money. That's a function of the market. If your stock price is higher, and if you need to raise money in the future, you can raise money at a higher stock price. But if you have a bunch of people who are so weak that they sell your stock whenever anything is a little bit scary, your stock price goes up and down too far, and now you have less potential for how much you can raise to actually operate your business. Institutions don't do that. They hold on for the most part through the years. And so you have a steadier stock, which means when you need to go raise money, you can offer some shares at a reasonable and favorable price and then use that to go do more great things. And so SoFi would benefit in that way. And for those retail investors who hold on through all of that commotion and irrational behavior by other retail investors who are more short-term minded, you will benefit from that. So I want to read you a couple quotes from Citigroup's CEO back in 2013 when some retail investors approached him or confronted him over the reverse stock split. And here's what he said. So I'm reading here, this article is called Citigroup Reverse Stock Split Still Irks Shareholders, 2013. The first quote is, "It was done to reduce volatility and to get shareholders out of the stock who were using it as a trading vehicle." They didn't want traders. They don't want you if you're a trader. That's another reason for this reverse stock split should it happen. They want stability. They don't want someone who's going to be fickle and trying to swing trade a stock. Because again, they want to study a stock that they can predict and maybe use to raise money from in the future if they need to. Stock traders are not good. Warren Buffett said it best. Not a direct quote, but he said, "We keep our stock price at astronomical levels, hundreds of thousands of dollars, so that we only have serious investors, long-term investors, people who are going to stay with us through all the ups and downs, because they understand that this is a long-term investment." And that's how Warren Buffett got so rich. Over the years, 50 years, long-term investing. And so he keeps his share price let me just show you actually. Let's talk about this. He keeps Berkshire Hathaway's share price, Class A, at $465,000. That's a lot of money, $500,000, just to own one share of Berkshire. And it was that way before fractional shares. Of course, today you can use fractional shares to get into Berkshire Hathaway, so you don't need to pay all of that to get into Berkshire. You can get a percentage of a share for $1 or $10 or $1,000. But most people just won't even consider investing in Berkshire because they can't even fathom that kind of number. They've never seen anything close to that number, or multiple, or even fractions of it. And he doesn't want you. If you're not in that world of serious investing, he doesn't want you in his stock. And so he keeps it high. And so that's another effect of a reverse stock split. Getting rid of all the traders, getting rid of all the swing traders, getting rid of all the people who are too weak to hold on for the long term. Because, I had 1,000 shares, now I only have 100, and I lost money. No, you didn't lose any money. It's just you got consolidated into less shares for the same value. Now they cost more, and we can be in a conversation. CNBC can talk about us now because they don't talk about penny stocks. But they talk about all the people, all the Nvidias and the JP Morgans and the Goldman Sachs, all those companies, because they are trading at reasonable prices in the multiples of tens and hundreds, right? Those companies are seen as serious investments. And that's where SoFi wants to be. But we won't be there if we're at $5 per share or less than $1 per share. So I know I'm just ranting at this point, but yeah, there's no reason to be so upset. I know people think that reverse stock splits are a bad thing and it causes the share price to go down because psychologically people are afraid that the business is not doing well and they think they're being tricked into a higher share price just to delude you. It doesn't have to be that way. That doesn't have to be the only truth. There's multiple ways that this can go down. And for SoFi, we've seen the numbers. We know what they're doing. They're not struggling to actually get customers or to grow their customer base. They're a market leader. They're a technology leader and provider of the services that the entire market, their industry needs to operate. 95% of neobanks, that includes Robinhood, Chime, Dave, Revolut, TransferWise, all those companies that you've heard of, they all run through SoFi's Galileo. And Technisys, which is another acquisition that they just bought for Latin America expansion and beyond. SoFi is not a dying company. They're not doing reverse split to save the perception of their business because the business is failing. They're doing it to save the perception of the business in the eyes of investors who matter. Those are the institutional investors. Those are the ones they care about a lot because they have a lot of money that can actually move the share price in the long term. So they want to keep those. They want to get more of those people and institutions. That's all it is. And of course, to not be delisted eventually if we get below $1. We need to have control over our share price in the short term so that we can make it through the uncertainty of today and this upcoming year. So that we can survive and see tomorrow, see the light, get through the night. Right? Everyone wants to be overnight success. And I say all the time, in order to be overnight success, you have to get through the night. You have to get through the night. That's in the word. Overnight success, right? So you have to survive, and that's what the board of directors are asking for. Just a tool, just in case short sellers have their way with us. Just so we can have a fighting chance. That way, once the share price goes up by 10 times at the maximum of the reverse stock split proposal, short sellers won't be able to get us down to a point where institutional investors won't touch us or the exchange will delist us. It'll be way too hard for them to do that. They'll have to get 40% of the float or 50% to get us down that far. So that's it. That's really it. I hope I've answered your question. And I'm sure I have more to say. I just wanted to get it out because everyone's been asking me about it. Vote yes. I guess that's the call to action. Vote yes. That's it. Just vote yes. Let the smart people who run the company do their job. Don't get in their way. Warren Buffett says, I invest in great management and I get the heck out of their way. Get out of the way of Anthony Noto. Get out of the way of the board of directors, who are very, very impressive people. Let them do their job. Let them do their fiduciary duty to all of us and keep this company on the NASDAQ and keep this company's stock in the pockets of institutional investors. That's the goal. That's it. That's all it is. Just let them navigate this period that we're in, because we don't know what's going to happen. And all they want is a fighting chance. I hope this has been helpful, and if it has, you know what to do. Like, subscribe, comment, hit the notification bell, all of that stuff. Do it because it's important for me to continue to do this, because YouTube won't recommend my videos unless you engage. And if you want to see more videos like this, more videos on SoFi and other companies that you're interested in, comment those companies below, but also like and share this video so that the video can reach more investors and the channel can grow and it can give me more incentive to make more videos. You have been watching bullacademy.org on YouTube, where we teach long-term investing by breaking down concepts and sharing the stories of companies to help you build long-lasting sustainable wealth. If you would like to engage with me outside of YouTube, feel free to follow me over on Instagram at Lincoln W. Daniel, where I share random thoughts on life and wealth building. As always, this video has been brought to you by our patrons at patreon.bullacademy.org, who support this channel financially to help us keep going and help me brainstorm new video ideas to share with all of you. We do this show together, and we do all of this in our private Discord chat, where we discuss the stock market in real time every day by sharing news, rumors, and new investment ideas, so we can all do our own research and then come back together and collaborate. So if you're interested in any of that, I hope you'll join us over at patreon.bullacademy.org. I'm Lincoln with bullacademy.org. Thank you again and have a great day.